Right, guys, welcome. I'll tell you what. Please give me the thumbs up if everything you can hear me, and all the audio came through for that because today has been an absolute nightmare. The normal software that I use to do these live streams packed up on me this morning. Couldn't access my account. Tried to reset it. It wouldn't happen. And so I spent most of today trying to come to terms with this streaming service, and I'm just so thankful that I've managed to set this up and it works. So thank you guys. Kenny, Nathan, welcome. So as always, this is an opportunity to answer some questions and have a good conversation and see where we go from here. So yeah, as you arrive, please just drop in your messages and I will take them one by one. There are already 22 of you here. Thank God for that. Well, you know what? I've been looking at this. So on the 1st of, I think it was, no, the 15th, we had 50, which was an all-time high then. The last time we did this on the, when was the last time we did this? It wasn't the 22nd. No, on the 1st of November, it was 50. Then on the 15th, it was 75 was the max we had. So I'm interested to see where we're going to get today because it seems to be increasing every single time. By count, this is the 15th live session that I've done on the channel. So with all of this stuff growing and improving, next year we might actually make these things a proper event. I've already got some ideas around this, so we'll see what happens. Right, okay, let's get into some of the questions. Right, so this one is from Mark. KP, good evening. First question for you on investing. At what price would you say Tesla is overpriced? Mate, that's a really, really good question. A lot of the price forecasts have been upgraded this week. So I was watching a video on YouTube about a week and a half ago. This is just before the inclusion to the S&P 500 was announced. And they were saying at that point that they thought that the Tesla share price would go up to about 600. 635 was this guy's forecast actually, and that was based on projections. So that was based on the number of cars that they were looking to ramp up to in terms of production. Then off the back of that, sales. Then off the back of it, they had took into consideration the insurance side to the business as well. And they thought at that point that the fair market price for Tesla would be $635. That was before the S&P announcement. So with the S&P announcement now, I think that it did cross 600 this week. I'm sure that I saw that. But at the moment, it's currently sat at $585. A lot of the investment houses have upgraded the price to $1,000. Is it overpriced right now? It's really, really hard to say. I mean, it's at this... We need to remember, this is being fueled and it's being... propped up because of the name. It's Tesla at the end of the day. I mean, the S&P 500 has been long overdue. People thought that this was going to happen months and months ago, right back when we had the stock split, but it didn't for some reason. So, is it overpriced right now? At this point, I don't feel that it is. Based on the projections and based on the fact that it is going to go into the S&P 500, my personal opinion is that $1,000 mark seems very, very realistic to me. Is it overpriced at this point in time? Many people will say that it is. I just don't think that it is because of it's Tesla at the end of the day. It's a revolutionary company. It's got Elon at the helm. He doesn't necessarily do things as you would normally expect people to do. And he's always been known for breaking the mold and doing what he needs to do. So that's my personal view. Many analysts will argue that it is overpriced right now, that, you know, it is all about the hype and all this kind of stuff. But I just don't think it is. I just think that, you know, Tesla is fantastic. I love the product. I was talking about this in my members group just before jumping on here. You know, I've had the car now for 5 years. The car is just, it's ridiculous. And for what they are building and the massive strategic advantages that they have over the likes of Porsche and BMW and Audi and anybody else that is going to come into this market. I mean, they've had a 17-year start. So they are going to be market leaders in this. And the fact that Porsche and all these other guys, Neo and all these new boys are coming into the market is only good for them. The stuff they've got in place is fantastic. So I don't think it's overpriced personally. I think a lot of analysts will disagree with me though. What are my thoughts on Neo? Popat has just asked there. I've actually bought a little bit of a Neo, and actually it's up, to be fair. So I think I got in late. I got in late at like 1:30, something like that. I think it's like, well, let me just have a look at it actually, because I can't remember what it's at the moment. I know it's gone up. It's definitely gone up since I bought it. But Neo is an interesting one. Neo is a Chinese company, so it's really important to understand some of the fundamental factors that go behind this. And for me, one of the big things that Neo has got going for it is the fact that it is backed by the Chinese government. I think they gave them something like $1 billion or something like that to have their headquarters in a particular location in China. But with that being said, there are some disadvantages that you need to be aware of, and some of these are the fact that it's backed by the Chinese government is a good thing, but it's also a bad thing. What if the government decides all of a sudden, we're going to change tact, or we want to have more control over the business? How are they going to scale from that? They also have a commitment when it comes to the manufacturing plant out in China that is actually subsidized, run by the Chinese government, and they have a clause in their 5-year contract to say that if the manufacturing plant sustains any losses, they have to pick up the tab for that. So as a new incumbent business, there are those levers and pressures that they have right now that really they don't want, but it is the cost of doing business. So as a stock, I think it has the potential to do well. I mean, the Chinese market is absolutely huge, and this is probably the biggest factor that it has going for it. It's a massive, massive, massive market. And if you know anything about the Chinese, they like to own their own industry. They don't like the idea of, Tesla manufacturing Teslas out of China and having, the market share of the EV market. They don't want that. That's not how they're wired. They want to have their own businesses domestically that will be the leaders in EV. So that alone means that they were always going to have some kind of governmental support. They're already selling cars. I think they delivered 10,313 cars in Q2. Which is impressive for a new startup. They've got battery as a service, which sounds like a great idea. So yeah, good company, lots of potential. I think it's really important to have a look at the downsides as well. And the biggest concern that people have about Neo is the scalability and how they're going to scale. If you look at them compared to Tesla, Tesla now have everything vertically integrated. Pretty much everything now is built in-house. All of the technology is built in-house as well. So with that, they're able to increase their profit margin on each car, which is further going to aid their profitability in the future once they get to scale in terms of the production numbers. You can't say the same for Neo right now, and that's probably one of the bigger challenges that they are going to face. So Neo, I think it's a good company to possibly get into right now. Let me have a look at the share price. The share price right now, I said where did I get 130 from? Let me have a look at this 1 second. Neo. But it's definitely, it's one that is on the radar, so it's $54 right now. I think I got in at 30 something. So it's $54 right now dead. So definitely have a look at it. But understand, obviously, that you need to do further research into it to make sure that it is worthwhile. If you do put money in, make sure you don't put all your eggs in one basket either. Right, let's have a look. Kenny, I have a two-parter. One, is there any point in saving any more after achieving an emergency fund, or is it best to invest the extra? 2, is bed and ISA a good strategy? What do you mean by bed and ISA? Let me know what you mean by that, mate. I don't know if that's a typo or not. In terms of the first question, is it worth saving any more once you have an emergency fund? It completely depends on you. It depends on how big your emergency fund is. Some people would like to have 3 months. They might get to the point where they think, actually, I'm going to have 6 months, and they save a little bit extra. Some people also works where they have 6 months, but they say, you know what, I'd rather have actually 12 months because it makes them feel a little bit safer. But if you feel that you've got to the point where your emergency fund is sufficient, then really you shouldn't really need that much more money, because the emergency fund should cover you for any uneventualities that, or any surprises that come around the corner. Investing would be the next best thing, because even if you put it into a savings account, you're not going to get a lot in there. And beyond having that money inside a savings account for emergency purposes, you're doing yourself no favors. So investing, whether you're going into a cautious fund just to kind of give yourself a little bit of confidence to start off with, but definitely have a look at investing, but doing it in a way that, number one, matches your where you are right now in terms of like your personal preferences and your lifestyle, and where you are from a life point of view. Don't just go gung-ho straight into a high-risk investment if you're not going to feel comfortable. The whole idea is that you feel comfortable doing this and you build confidence gradually. But if you've got your emergency fund in place and you're happy with it, then definitely bear in mind that, you know, investing really is the next logical step for that. So, yeah. Thank you, Nathan, for the super chat. I really do appreciate it. Thank you very, very much. Let me know what your part 2 is, mate, because I didn't. It's bed. I don't know what you meant by bed. I don't think that was a typo. So let me know what that is, Kenny. Hello. What's your thoughts on innovative finance ISAs? Yeah, they're really, really good. I mean, an innovative finance ISA is your ability for you to basically get into something new. It's kind of like helping new burgeoning businesses. So the reality is that it's still going to be tax-free. You're going to be taking higher risk, obviously, because it's kind of like crowdfunding. So just make sure that you're going to be comfortable with the level of risk that you're going to take with an innovative finance ISA. They do a lot of work in terms of where the money actually goes and trying to give as much stability as possible, but you're still going to be taking an element of risk. But if you get a winner and it returns really, really well, it's completely cash free. So happy days in that regard. Leon, have you heard about Neo? Yes, I have. What do you think about it? I've just spoken a little bit about Neo there, Leon. So hopefully you caught my gist of what I was talking there. Costadin, hi Pete. What are your thoughts about investing in penny stocks? Penny stocks. I would ask why. Penny stocks are extremely high risk, mate. Extremely high risk. I mean, you might get lucky with one or two of them. But if you're going to it really depends on what your view is, mate, and if you got the stomach for it, absolutely do it. But just don't go and put all your cash into it. I mean, you can buy funds now of, you know, really good established companies. Why would you do it into a penny stock? I know why it's attractive, because, you know, you pick up one of those and it does really, really well, then yeah, you're on your way. But, you know, with the thing with penny stocks is, how do you even do research on that kind of stuff? Because there's limited information that's out there. They're penny stocks for a reason. I'm not saying don't do it, but just understand what you're actually doing, and the fact that you're likely going to have quite a big failure rate. And are you in a position where you want to be able to stomach that? Can you stomach that? Whereas you could buy or put a little bit of money into other stocks, established companies, and hopefully make a little bit of money and start to build a portfolio from there. It's a tough one, mate. It really, really is. I personally don't invest in penny stocks. Doesn't mean that you shouldn't. I would just say, you know, make sure that you know what you're doing, and make sure that you understand any risks that's associated with it as well, and don't put all of your eggs in one basket. Those are my thoughts, really. Yeah, let me know if that answers the question, Mark. It's a great company, totally nailing the car and infrastructure for sure. There's got to be an upper limit somewhere, though. You know what? That's what they said about Amazon. That is exactly what they said about Amazon. For years, Amazon was loss-making, and companies still. I think so this is where the person at the head of the company is so important. What Jeff Bezos managed to do was to convince the early investors that he was going for the long game, that he was going for a model that would essentially monopolize online shopping. And that's what he's done. But he took the long game. The same thing could be said for Tesla. Same thing could be said for Elon. He is looking at the long game. That's why he made the patents open source, so that everybody else would come to the table, knowing that he's built the foundation to benefit of the fact that everybody's now looking at electric. But guess what? These guys have been around the longest. They've got the best tech. They've got all of these features. The cars are amazing. You get over-the-air updates. I mean, who was doing over-the-air updates in cars before Tesla came along? Like, I remember buying cars back in the past, and like after a year or two, with all the buttons and the dials, the car felt old. You don't have that in a Tesla. The car gets better every single year as the software is updated. You have to be in one of these things to understand it, mate. It's ridiculous. But, you know, really, really big. And like I said, they said this about Amazon. They said this about Amazon, and look at where Amazon is right now. And I think the same thing will apply for Tesla in the future when people look back at the stock. Yeah, yeah. Hey Pete, what's the best tool or site to get info on stocks, the ratings, and potential, as well as seeing financial analyst opinions on various stocks and developments in the global economy? Really, really good question there, mate. At the moment, I'm actually in conversation with a couple of people about doing a feature on the channel specifically for those tools specifically. At this point in time, I tend to go left, right, and center to do a load of this stuff separately. Um, I can't say who they are right now, but there will be something coming down the track in maybe 2, maybe 3 weeks' time, hopefully on that specifically, and it will walk you through the tools. So what they do is they do the financial analysis and they have a look at the stock across a number of other ratings or aspects, and then give you an indication of whether they're a good a buy, a sell, or hold. If you want to use an app, mate, that gives you a little bit of an investor's or a market sentiment about a stock, it's worthwhile downloading the Stake app. I'm going to put them in the comments here. Go and download Stake. If you fund the account, you need to fund the account with £50 at least. Within 24 hours of opening the account, you get a free share of Nike, GoPro, or Dropbox. But in that app, they have analyst ratings. So they tell you whether JP Morgan thinks Tesla is a buy, a sell, or a hold. And it's just one little thing that you can use as an addition. But at the moment, I've got something that's coming down the track in a couple of weeks' time that will give you the tools that you need with a link and all that kind of stuff as well. So hold tight until then, man. I know that doesn't answer the question directly, but from what I've been seeing is, you have to go and do this. I've been doing the research separately, Yahoo Finance, looking at the financials on there, then doing Google to look at the business and the company and some of the other stuff, YouTube for some additional information about the business owners and what their vision are, any bits and pieces that you can find. And to a certain extent, you're still going to need to use different sources, but that's what I've been doing currently, because all the ones that do that are investment house grade, where there are hefty annual fees for it. There isn't a free tool that I'm aware of on the market right now where people can just access them to get that analysis completely for free. Nathan, I've just opened my first option shares ISA with Nutmeg, and I'm really looking forward to building up a savings pot either next year, although I am anxious as a first-time investor. Mate, Nathan, that is a completely natural position to be in. What I would say is, if you're nervous, start off with something being cautious first. So don't just go gun-ho straight into a high-risk fund. Go into something that is either balanced or cautious. Kind of set up your direct debit. I mean, Nutmeg are good for this. They would have built your portfolio where your money goes in. You're obviously paying money in by direct debit, so you'll be literally just going back into it and putting your money in. That will build your confidence. Give it a little bit of time, then you can start looking at the more sexy stuff, the stock picking and trading 212 and all that kind of stuff. But if you've started with Nutmeg, that's a good place to start. So it's natural to feel a little bit anxious as a first-time investor. One thing I would say though is, definitely try and make sure that you pick up as much knowledge and know-how as you can. There's a lot of free videos here on the site, on the channel for you to watch and hopefully get a little bit of an understanding. If you want something that's a little bit more structured though, I do have an investment course which you can take. Actually, over this weekend, I've actually done a Black Friday discount, so it reduces it from £99 to £60, but it's in 90 minutes, it's 4 chapters, 14, 15 lessons, and it will give you all of the basics that you actually need, from asset classes, how they work, asset allocation, the investor's mentality, the loss aversions, how to manage that, managing risk, the theory between investing over a long term, over a short term, and where you should kind of try and position your risk appetite and your investment approach. That then goes into how investments are built and how the assets are allocated into the portfolio based on your risk profile. It covers tax, it covers picking stocks, some key things to consider, all that kind of good stuff. So might be worthwhile checking that out. There are links in most of my videos But there are lots of free stuff that you can actually view here as well that will help you. Entrepreneur mindset. Where did you get your hoodie from? This, my friend, is a Primark hoodie right here. It's not an expensive designer one. It is a Primark hoodie. I think it was like 12 quid, something like that. Nathan, I'm hoping to save up to 10 to 12,000 in this tax year. I have my emergency fund already set up. I'm in this for the long term, although 10 to 20 years. So hopefully that helps. No, that's perfect, mate. I mean, that's where if you're long term, emergency fund first and foremost, then it will allow you, because your emergency fund will allow you to actually then just plow money into the investments, knowing that you've got a backstop just in case you were ever to need the money. So you can afford to really put money into the markets without really having to worry that you're going to need that money over short term. So you'll be fine. Hakeem, how you doing, mate? Sorry for the inconvenience. High pitch the volume. Let me have a look at this. 1 second, mate. Is the volume high pitch, guys? Let me know and I'll get it down. Let me just have a look at this very quickly. I might just be able to turn it down on here a little bit. That might be a little bit better for you guys. Let me know if not. I'm going to turn it a little bit down a little bit here as well. Okay. Where were we? What about investing in Neo's battery company? Good question. I don't know enough about the battery company, if I'm completely honest. It depends. So battery technology, when it comes to these cars, there are different kinds of cells, and I don't know enough about this, but from just listening to like Tesla Battery Day, there are dry cells, there are wet cells, there are different cells built with different chemical compositions. They talk about cobalt, they talk about all these things. It depends. You will need to do a lot of research around how they're building their batteries, what materials they're using to build their batteries, and whether they're solid state batteries, so on and so forth, and then what the marketing streams are beyond just Neo. Are they providing other Chinese EV manufacturers? If they are, then it could be a really, really good bet. But, you know, battery technology at this point is very, very interesting. There's a lot of interest in that, but there's also this scare that there's a shortage of resources. So what Tesla has been doing is they've been trying to buy companies that have mining rights to these materials, trying to monopolize that part and obviously future-proof their future. So if you're going to do that, there's a lot of research to basically do just to make sure that they do have all their bases covered. I'm sure they do if they're manufacturing batteries for big business, because those businesses would have done some due diligence. Right, let's have a look. Shadow Water. Is there any difference in the Vanguard UK and US? In the Vanguard UK and US, I assume you mean the businesses. The businesses will be exactly the same. They may have different leadership because of jurisdiction and stuff like that. But as a company overall, they will have a global vision. If you're talking about the fund specifically, then yes, the funds will be very, very different, because one will be predominantly UK-based or UK-focused fund, whereas you would have the US-centric funds as well, which would be the S&P 500 or so. Let me know what you meant by that, mate, because I'm not entirely clear what you meant. Waleed, hi Pete, how do you know if their ruling is within stock to shares ISA for day trading? Right. Do you know if there is a ruling within stock to shares ISA for day trading, i.e., if you want to make large sums within the 20k allowance, would this all be exempt regardless of how much I make? Yeah, so the rules within an ISA is you can contribute £20,000. That's all you can contribute. If you go over the contribution, you will be over the limit, therefore in breach of the ISA limit and the ISA allowance for the tax year. So if you contribute in the process of you day trading more than £20,000, you're not allowed to do that. If you put £20,000 in and it blew up to 100 grand, then you're still within the parameters. So I think for you, it will be keeping track of what you contribute and what returns you get. And if you are taking money out, what you're then putting back in, because you have to track your 20k very, very closely. So just bear that in mind. Kenny, moving GIA ISAs into an ISA when the ISA allowance renews. Yeah, there's nothing wrong. Right, so you've got a general investment account, right, you've got a general investment account. You're going to move from a GIA into an ISA. That's fine as long as you do it within. So as long as you do that within your within the tax year, then you're completely fine. Because essentially, what used to happen is this: when I was advising clients, what we would do is, if you had a client who had £20,000 already maxed out their ISA allowance for the year, right? What you would then do is, say they had another £20,000, you would go and park that into a general investment account. And when the new year starts, you would then have that money go from a general investment account straight into the ISA. There's nothing wrong with you doing that. You're completely within the rules for doing so. In fact, plenty of people do that. They have it on autopilot almost every year. So in other words, they'll have like a general investment account with an instruction to go. Literally on April 6th, another 20,000 goes in. So you're completely fine to do that. What about shares? What about shares on Trading 212? What do you mean by that, Marilla? What about shares on Trading 212? You mean buying shares on Trading 212 or shares in Trading 212? Let me know. Senna, are you allowed to pay into more than one investment ISA in a year so long as you don't exceed your 20k allowance? No, you're not. You can only have one of each kind of ISA every single tax year. So one stocks and shares ISA, one cash ISA, one lifetime ISA, one innovative finance ISA. You cannot open more than one of them in a tax year, regardless of your tax allowance. One per year. Michael, is it possible that there will be an decrease in the market in the near future due to coronavirus? Asking because I want to know if there will be an opportunity to buy more shares rather than save money for that. Mate, if I had a crystal ball, I would be a millionaire right now because I would be investing in the markets knowing exactly what's going to happen tomorrow. I have no idea. Nobody knows, mate. If you want to invest in the market, you're better just investing in the market now, not waiting, because guess what? You could wait and the market just continues to grow, and you're still waiting for an opportunity for it to come down and you've missed out on all the growth. So it's not about time in the market, it is time in the market that matters. If you've got some money set aside right now, just get it invested and, just ride the wave, mate. That's the deal when you're investing in the stock market. There is no such thing as trying to time it and trying to pick the best time to get in. You can't. It's almost impossible. No, but if you had a crystal ball, it would. Or you could, if you had the sports almanac from like Back to the Future, then absolutely. But nobody has, unfortunately. So just get in and start off, low risk first and foremost. Just try and build your confidence and see what happens. But it's impossible to time it, mate. Possible. If you have an ISA trading account and you invest, say, 19,000 on the first year, which doesn't attract tax, but in the second year, if you invest, say, 18,000 more, does it attract interest for the portfolio? Right. Don't really understand what you mean by that, mate, because if you invest 19,000 in the first year, you're below your allowance, £20,000 allowance. If you invest £18,000 the second year, then you're still under your allowance for the year. So I'm not really sure what you mean or what the question is. In both cases, you've contributed less than your ISA allowance. If you get any interest returns from savings or any investment returns or trading returns, it will all be tax-free. So, yeah, let me know if that's clear or that if that's what you meant to ask. I think that's what you meant to ask. Costadin, thanks for the info. It's very helpful. I know some day traders like them. That's why I asked. It's fine. Slovakia. Michael, you're from Slovakia. Welcome. Jesus Christ. Okay. Hello. Leo, with your experience as a mortgage advisor, do you intend on making any content about investing in property, buy-to-lets, for example, and the tax benefits of setting up a limited company? A mortgage advisor, I mean, invested in property as a property investor is completely different to being a mortgage advisor. A mortgage advisor only literally facilitates the mortgage and puts people in touch with the conveyancing and the solicitors that go alongside it. A mortgage advisor isn't a property investor. I know a lot of property investors. I know a lot about SVPs, special purpose vehicles, and put them into a limited company. Really, that is the forte of an accountant. I'm not really an accountant, so it's something that I could probably do on the channel, but not something that I would major on, if I'm completely honest. Investing in property is its own beast, and it's not a field that I've worked in I've worked with clients, I've advised clients on that kind of stuff before, but it's not my area of expertise. So probably not, but it's probably something I could do a couple of videos on, or maybe get someone to collaborate with on that front. I do have some stuff on the podcast on that though. That's probably where you want to go, Leo, if I'm honest. Lara, is it necessary to open accounts with Vanguard if investing in Vanguard S&P 500 or FTSE 100 on Trading 212? No, you don't. If you buy the ETF on Trading 212, Trading 212 is essentially a broker. You don't have to go and open an account directly with Vanguard for that. I don't believe. I'm pretty sure you don't. Pretty sure you don't. Iklas, FinWiz is free and pretty decent at looking at stocks. Oh, that's a good one. Oh, okay. I didn't know about that one. I'm going to write that down now because I'm going to go check them out. FinWiz. FinWiz. Learned something new this evening. Thanks for that. When should you sell your stocks for a profit? This is a really good question. Mate, it's completely up to you. It's hard to say when. Like, at the end of the day, when you bought the stock, did you have a price point in mind where you thought, you know what, if it reaches this point, I might actually just take a little bit of profit? There's nothing wrong with taking profit, by the way. A lot of people actually do that, and they use that money to reallocate themselves into something else. When you should actually do that, though, is completely down to you. If you had like a number in place. So for example, with Tesla, if you thought, oh my God, if it ever got to like $600, I'm going to sell and take a little bit of money off the table, then that's what you should do. I thought about it a couple of times. My portfolio with Tesla is up, it's up about 200 and something odd % right now. But I'm just thinking of holding it for the long term. I'm just interested to see where it's going to go, if I'm completely honest. And whilst it would be nice to take some money out right now, I'm not really that fussed. But I'm just curious to see, will it go past that 1,000? How high can it go? Kathy Woods has been saying for years that she thinks it will get to $4,000, $6,000. I mean, I would love to see it go that far. I would love to just see how long it would take or how quickly it would take for it to go that far. Part of me wants to leave it in there to see if it does. I might sell it at that point. I might even just be like, you know what, I want to see how far it will go from there. I don't know. But it's just really down to you. And when you feel like you want to take profits, there is no right or wrong answer to this, or right time or wrong time to do it. It's completely down to you. I think the question will be is, you know, if this is an itch or a question that you have right now, the question will be, if the share price went down to 300 tomorrow, would you regret not taking profit? If it is a yes, a resounding yes, then maybe you should take profits. It's hard to say. It's really down to personal preference. What's the best time in the day to buy a stock? In the day to buy a stock. I don't particularly buy. I mean, I don't know what you mean by that, mate. In the day to buy a stock. I mean, if you're using Trading 212, you can execute a stock any time. If you're using any of these new apps, you can execute a stock at any given time. There isn't a particular day in time in the day when the stock prices are all up or the stock prices are all down. So if you're talking about this from a trading point of view, I don't really trade. And even if you're trading, then you are still going to be looking at the price points and whether you set a trade and it's reached your target or not. So I don't know. Kalipo, let me know what you meant, or just elaborate for me a little bit if you can, please, mate. Dan, have you had a chance to read the How I Invest My Money book yet? If so, what's your thoughts? Yes, mate, I have. I've got it right here, actually. It's a really, really good read. So one of the contributors to this book, I actually know Tyrone and Deshante. And it's been interesting to see how professional investors who have worked in investment management for years and years and years and years and years go about investing their money. And the reason why it's interesting is because one thing that stuck out to me is they all have a very common theme around how they actually invest their money, in terms of it is all very much low risk. They all talk about ETFs. They all talk about keeping their costs really, really low, their overheads really, really low. A lot of them in the book actually own their properties outright. A lot of them in the book also have made the decision to put a lot of a portion of their net worth into cash as an emergency fund, just in case. Very, very fascinating. Really, really worth the read. I'm about halfway through at the moment. I've got to finish the half this week, but really, really good read. Very, very insightful. And I noticed as well for some of the younger guys who are like Tyrone, for example, he's heavily invested in like Bitcoin. That's his thing. Deshante, heavily invested into his business. And this idea of, the stock market is the only place. A lot of these guys are building net worth in their personal brands and in their businesses. So it's interesting to see their take and their investment into that and how they view it as part of their net worth as well. It's a really good read. If you've not got this, guys, I'll try and post a link in the comments before the end of this stream. It's definitely worthwhile reading. I think it's like $13.99 or $17.99. Definitely worth the read. Very, very insightful. Mark, Laura, so there's a conversation going on there. Call sign. I've not opened my stake account yet, as I'm still learning what I can before I start. Really want to understand as much as I can. Your videos are helping me get a good idea. Good man. I appreciate it, mate. I really, really do. There's lots of free stuff here, like I said. So, and it's good that you're on your journey. What are your thoughts on Planeteer? You're the second person who's asked me this today. I had this on IG earlier. I've not followed Planeteer. I'm going to have to write this down because you're the second person who's asked me about this today. I don't have any thoughts because it's not one that I've actually followed. I can't say that I actually, spend a lot of time looking at specific stocks or looking at specific stock news. Because number one, I don't have the time to. And number two, the main avenue that I invest money is basically via funds. Because I think it's a better way for me to be able to invest and get saturation, diversification, and all that good stuff without having to do the research and spend the time doing that on particular funds or stocks, sorry. So Planeteer, I don't know. I'll have to have a look at it, and I might have something on the next live that we've got here. Thank you, Pete. I'll be purchasing your course. Top man for your help. Appreciate it, Nathan. Entrepreneurial mindset. What did you do before YouTube? Are you working for a private firm or as an independent? I did a number of things. I worked for an investment house for a number of years. Where we were looking at building portfolios, managing portfolios, so on and so forth. I was a financial advisor for a number of years as well. I worked for an investment house in Canary Wharf. They worked in the world of pensions, which is why I'm so passionate about pensions. I've been in financial services 15 years, mate. So I've worked for banks, investment houses. I've advised. I've worked for wealth management firms. I've worked for quite a few, essentially. So, yeah. Angus, I'm a student whose child ISA matured. I don't work or pay tax, so another ISA doesn't make sense. Is there a recommended place for students to invest? Did use your code for stake, but have been conservative? Good. So if you had your ISA mature, then you should definitely go put it into another ISA, mate. The reason for that is, yes, the interest rates are pretty low right now, but if that were to turn on its head tomorrow, then you don't want to be paying tax on an account that could potentially get you quite a bit of return. Not that that's going to happen anytime soon, but if it did, then you definitely want it in an ISA. So definitely go and put it into an ISA first. So you can just go and open just like a normal ISA now, like a cash ISA, money box, for example. You could open a trading 212 ISA to get you started if you wanted to invest as well. But definitely go put it into an ISA, especially if you're investing. Definitely go and put it into another ISA. Walid, thank you so much for the super chat, mate. I really do appreciate it. Sorry, I only just got down to that right now. Thank you. Senna, why are some companies listed on more than one stock exchange, e.g. New York and London? And why are their share prices sometimes quite different on the two? It really depends. Some of them, so that's a really good question. See, with some companies, they have different class of shares. So sometimes you get a little bit of a difference there. But which companies are you talking about on the New York and London Stock Exchange with different share prices? Because one came across, there was a comment on YouTube this week about Oasis Petroleum, and they were saying that they had two different share prices, and that's because Oasis Petroleum actually had a bankruptcy filing, and therefore they did a ticker change. So there could be a number of circumstances as to why they're different and what's gone on. But if you can give me an example, I can have a look into it. But typically, sometimes a lot of companies will have different share classes that they issue on the stock exchanges. So therefore, they will be at different prices. And they might have a different variation in terms of the ticker. Stocks on Trading 212. So stocks and shares on Trading 212. So I'm guessing that you're talking about investing in Trading 212, buying stocks on there, Marilla. Trading 212, I use Trading 212. I've got some stocks on there that I bought. It doesn't hold my Tesla or anything like that, but I've probably got maybe, I think, about 15 or so stocks in there at the moment. I found them okay to use. They did have some issues a couple of weeks ago. There seemed to be some kind of cyber attack across a lot of the providers, and I couldn't get into the account. I think a number of people must have noticed that, but I've found them to be okay in terms of usage. Very, very easy to use. So I found that they've been okay. In trading into trading 212. In trading 212, there's a Vanguard S&P 500. If you get it through the UK stock exchange, is there any difference if you get it in the UK or US? So if you're looking at the S&P 500, it's all about whether it's dominated. You can get one that's dominated in the USD, and you've got one that's dominated in the British pound. So ideally, if you get the one that is traded on the London Stock Exchange, that will likely be dominated in pounds, which means that you haven't got to worry about the currency exchange. Because if you're buying dollars and you sell the ETFs, you've then got to worry about whether the dollar is up or the pound is down. So if you can get it in pounds, it gets rid of that, and you're also probably going to be saving money on the fee to exchange it from pounds to dollars. So it's all about how it's dominated, and that's what I explained in the video on Tuesday around if you can get it in British GP, get it in British pound and not USD if you can. But that's not always the case with a lot of ETFs. Sometimes they're just in American dollars and that's it, so you've got to deal with it. Leo, do you intend on doing any reviews on any peer-to-peer lending platforms? And have you looked at LoanPad? No, not really. Peer-to-peer lending, if you don't know what you're doing, it's a high level of risk, essentially. It is a high level of risk. They can be very, very good in terms of the returns that they offer you, but it's not really stock market investing. It's not something that really piques my interest. If it's something that I get a load of requests for, then I can absolutely review some of them. I'll write down LoanPad right now and have a look at it. But with this, it's mainly investing that I look at, and peer-to-peer lending I don't really class as investing per se, because you're looking at businesses that aren't really listed on the stock exchange. So Stefania, hey Pete, thoughts on Moderna and Pfizer? Interesting. Well, look, there's a number of them now who have got vaccine. There's Oxford vaccine apparently on its way now as well, reporting similar effectiveness as the Pfizer vaccine. This is really going to boil down to who is first to market. AstraZeneca have fallen off massively. And so for some people, they thought, well, actually, AstraZeneca was actually going to be the one who would actually get something quicker than the likes of Pfizer and so. But their share price has held up pretty good off the back of the announcements. I think if they do become first to market, the first to actually get a vaccine out actually to the public, then there's a lot of movement in the share price potentially for that. Those are my initial thoughts, but they do have a little bit of competition in Oxford now having one. I don't know. It really also depends on the deals that they actually strike too. I don't know whether it's the US that are doing a deal with Pfizer or not. I think it might have been. But the US did a load of deals with a load of pharmaceutical companies for a possible vaccine. But there's a lot of money in it if they do. If they get it to market, there's a lot of money to be made there. And therefore you'll see that profit in the share price as well. So if you're looking at having a punt on it, it's probably worthwhile having a punt. I don't hold it myself. I hold AstraZeneca, but I've held AstraZeneca for some time now. It's one that I'm keeping an eye on. Marty44, okay, starting a nutmeg stocks and shares ISA after watching your review. Very happy with it so far. Thank you, mate. It's always good to know that people actually have a good experience from watching one of the videos. I'm not linked to any of those guys, so I don't get any referral fees or anything like that, but it's always nice to know that when someone actually watches, a video and they do go and use them, that they do have a good experience, because if they don't, that could mean I get to do another review video essentially. So that's good to know. Thank you. Let's have a look. What have we got here? Right, let me just find my way back because I went up for a second. Where was I? Oh, here we are. Okay, but so this is Marky again. I'm retiring and will be investing quite a bit more than my ISA allowance. Any idea what else I could invest in to give me a return that will at least beat inflation? Great channel, by the way. So if you used up all of your ISA allowance, the next place, logical place you should start from a tax efficiency point of view is probably maybe a pension. So if you're still working, try and see if you can get some more money into your pension, into your workplace pension, for example. Workplace pensions really give access to the ability to invest in the market at a low cost because the provider will be capped on how much they can charge you. Outside of that, you can probably have a look at a personal pension as well. The reason why I'm saying pension is because if you're going to be retiring, depending on how old you are, the money that you put into a pension right now could potentially, you could have a portion of that back out tax free with your pension commencement of some your PCLS or tax free cash. So that might give you an added benefit as well. So pension. Other than that, you can have a look at just general investment accounts that will get you into some kind of low-cost fund, maybe an index. But with that being said, though, mate, you are at a point in life where you probably need to sit down with someone just to make sure that what you've already accumulated is going to be enough for you. Because whilst you need a return, what return do you need to meet your requirements of retiring right now? So for someone like you will probably benefit from actually sitting down with a financial advisor. I don't know whether you trust them or not, but a financial advisor would do really, really good job for you, given where you are, if you are actually going to be retiring right now, just to make sure that you do have enough. Because what they do is they do something called cash flow modeling. So whatever you've accumulated now, and I don't know how old you are, Mark, but you probably have another 25, 30 years ahead of you. So the question will be, is what you've accumulated now going to be enough to sustain you for 25, 30 odd years? Who knows? You're not going to know that without doing some kind of cash flow modeling of some kind. But at the same time, you do also need to be mindful of how you're actually investing and where you're investing, because tax efficiency is going to be important for you. Right, here we go. I suspect there's a conversation going on there. Marcus, there was a conversation going on. Marcus, welcome, mate. Alan, what do you think of tattooed chef stock? I've never heard of tattooed chef, mate, so can't comment. Might be one that I'll have a look into. Not heard of it. Kenny, how often do you check the progress of your investments? I'm banning myself from logging into Vanguard for at least a week. I don't actually. Well, I've got everything on my phone, mate. So I don't look at it religiously. I just don't. I'll probably look at it once a month, maybe twice a month, maybe something like that. But again, with those kind of things, it's like, it's all very good when the markets are going up and the stock prices are going up. That's fine. It can feel very, very different when the markets are going down. So I try not to pay too much attention to it and just have it there in the background as a nice to have. What company is going to be the next 5G boom? Good question, mate. I don't know. I haven't followed 5G specifically. I think if you're going to be looking at 5G, there's a lot of talk around AT&T and some of the infrastructure that they have there. So maybe that's one to have a look at. But specific 5G tech, not something that I've actually followed. Food Dwell, I wanted to know if you invest 19,000 into an ISA in the first year, which doesn't attract tax, but in the second year you invest 18,000, does it attract interest? Since the total is 37,000, no, because in both tax years you've paid money into the account. Your contribution is below the £20,000 each tax year, but because it is in an ISA, it is completely tax free. If you're saying does it attract interest specifically, well, it depends what account you've put it into. So if you put it into a savings account with a 0.1% interest rate, then you're going to get 0.1% in interest based on the amount you invested. So it really depends on where you put the money. If you put it in an account that is going to give you a 10% interest rate, then you're going to get 10%. It depends on the account that you select, effectively, but it will still be tax free. Jordan, enjoying your channel. Thanks for the great content. Thank you so much, mate. I'm going to be moving from the UK to the US in 2 years to study at university. I was planning on opening a trading 212 ISA before I leave. Will I still be able to use and manage it whilst I am abroad? Good question. So, If you're going there to study, it's going to depend on your status out in the States. The States are really, really, really weird when it comes to people having money or invested money onshore, offshore with them. They've got something called factor, which is basically like it's a reporting thing essentially. So if you're going there as a student and you're going to be on a student visa, you should be absolutely fine because effectively you're still from the UK, so you'll still have a national insurance number. As long as you've got access to the app, you'll be fine. If your status were to change from student and you were to become a resident, then that's a completely different kettle of fish, because then they basically force precedence in terms of tax position, and then you really run into the possible situation you could be double taxed, which is not very nice. But if you're going to be on a student visa, you should be okay out there. But really, for that, you need to speak to a tax specialist. But at your levels, you should be fine. You'll still be a UK resident with a national insurance number. So managing the account should be okay. It will just be whether you have access to the Trading 212 account over in the States. That will be what's worthwhile checking before you leave. Hey guys, do you see my question above? Chris, which question is this, mate? Second time he missed it. Let's have a look. Let me just go back quickly, mate. Christy, 1 second. Christy. Can't see your question, Christy. Can you pop it down again? I definitely can't see it. I'm going to look on the way down again, just to double check and just to be sure. No, I can't see it. Can you pop it down there again, please, Christy, and I'll answer it. Mark. Yeah, that's what Marcus said as well. Right, let's see where we are now. Thoughts on premium bonds. Premium bonds right now, James, could be a really good option for you, especially with interest rates as they are right now. Premium bonds are going to be tax-free. It will be just a case of trying to find which one is going to give you the best rate on the market right now. But it is definitely a good alternative to cash. But definitely do your research on which ones are going to give you the best returns right now based on what's going on. Just paste it again, Christy. Contains a banned word or something. What were you asking? Right, here we go. If I bought an ETF bond or a gilt on Trading 212, is that the same as buying a fixed bond or a gilt from Zupa, Saga, etc.? Right, so if you buy an ETF bond, then it's going to have a number of bonds in it. So essentially you are buying a basket of bonds if you buy an ETF. It's not the same as buying, say, one gilt from the UK government, for example. So with an ETF, you'll have a number of bonds in there. They might be corporate bonds, they might be government bonds or gilts, but you'll have a basket of them. And because it is an ETF, you'll be able to trade and get out at any given time. If you bought a fixed rate bond, then you are fixed for that term. If you wanted to get out, you would have to pay penalties. So an ETF bond will give you a bit more flexibility. It will give you access to a wider variety of bonds than if you went and go and bought, say, a fixed rate bond from Nationwide, for example. So it is almost the same, but it's not the same. The ETF is built very, very differently. So you'll have a number of bonds in there. The important thing that you would need to do is basically just make sure that you understand what bonds are in there. And for that, you need to have a look at the key investors information document or any fund fact sheets that you actually find. Johnny, looking to invest in stocks and shares via a fund. I'm 28 and going for growth via a fund. Is the adventurous option right for me? I have other cash savings elsewhere too. Mate, that's really, really hard for me to say that you should definitely go for an adventurous view, because there are so many other things that go into whether an adventurous fund is suitable for you. Yes, emergency fund is important. Yes, you need to have one. If you don't have an emergency fund, then high-risk adventurous fund is definitely not for you. So an emergency fund, do you have one? I don't know. Worthwhile asking yourself and just checking. Also, are you tight with your cash? Are you able to control your money in, money out on a monthly basis? Are you investing spare cash without having to know that you're going to need it, hence the emergency fund. But there are so many other variables in there. I don't know where your natural disposition is as an investor. So I don't know where you naturally lie. How long you investing for? I don't know. So again, that will come into it. There are so many things, mate. I mean, the best thing for you is if you're nervous, start with a cautious account, get confidence and build into it. You may want to just go adventurous, but with adventurous, you need to understand the risk. More adventurous, yes, the higher the possibility that you're going to get a decent return, but also the higher the possibility that you're going to lose money or the fund falls in value because of the risk that you're taking. Is really, really hard for me to say. I don't know you personally. I don't know your circumstances, so I can't say, right, this is what's best for you. There's just so many factors, mate. You have to do what you feel is going to be comfortable for you. There's lots of videos on this channel that will help you with the whole, well, actually on the course, because it's not actually in one of the videos just yet. Maybe I do need to put it into a video that talks about investment time horizon, whether you're investing for the long term, short term, and where the risk position actually held within that. Typically, if you're investing for a long term, then you can afford to take more risk. But again, there's other factors that come into it. Lara, what's your thoughts on biotech stocks such as Medina, Sorrento? Right, again, I don't follow individual stocks specifically. Unless something is mentioned to me or on my radar, I don't spend my days pretty much looking at stocks specifically. Again, it will be about what are these companies all about if you're looking at what they actually do. What gap in the market are they filling? Sorry. What's their service? What's their product? How needed is their product? How needed is their product? What is their balance sheet right now? What's the vision? Who are the leadership? Who are the people who are actually behind the business, and so on and so forth? It'd be hard for me to comment on those guys because I don't follow them. So, Sienna, what company? The company I was looking at was a Carnival Group on the New York Stock Exchange, and Carnival PLC on London Stock Exchange. So it looks like they've got a UK business and an American business, then they will be listed differently under the stock exchanges. Have you looked at the detail of the company in terms of the information on the company, who actually owns it? I would do it now, but I haven't got enough time, and I won't be able to share the screen with you to do that research for you. There'll be a fundamental reason as to why they're listed differently. I mean, Corp and PLC are completely different. That tells you they're two different companies. They may be of one overarching company, but that says to me that they are registered as two separate entities across two different jurisdictions. So if that is the case, they are going to have one company here in the UK, which is a public liability company, and a corp, which is more like America's. They have corps and LLCs out there. So for the US company, which is the corp, they're listed on the New York Stock Exchange. For the PLC here in the UK, they're listed on the London Stock Exchange. So as a conglomerate, they probably have a massive group because they've got two distinct companies. They floated separately as well. Right, maybe we have actually got down to Christie's question here. Right, 1 second. Where are you? No. Your question is still not here, mate. Your question's still not here. Okay, call sign. Do you do face-to-face meetings to talk about ISAs, ETFs, and individual stocks? Are you an independent advisor that has like an office? No. I am a qualified financial advisor. I don't advise anymore. I do one-on-one coaching with people, and the whole point of the coaching is that if you need to understand how the ETFs work and how all this stuff can actually position so that you can go and build this yourself, I do work on that. One of the easiest ways that you can actually do this is actually to get access to my Discord group. So underneath the channel, there's a join button. I'm taking all of my members through my investment course right now, and they ask specific questions about, okay, so if I'm looking at this, or I want to use Vanguard, or I'm looking at this fund, what does this mean? What does that mean? So on and so forth. So I provide an educational service on that. But in terms of like sitting down with you doing a financial plan, I don't do that myself. I can definitely recommend you to someone that I know does a really, really good job because I've worked with him for many, many years, but it's not something that I do on my own. If I was a financial advisor, I wouldn't be able to do this on YouTube because they would be like, no, because compliance would not allow me to do so. So it's not something I do. But if you do want access to have conversations with me and learn a little bit more, the easiest and the most cost-effective way for you to do that will be under the memberships offering that I've got on this channel. So just check out the join button and see if that is worthwhile for you. It's $17.99 a month. You get access to the Discord group. We meet every Sunday at 7 p.m. to go through the course, and I answer questions. And there's a good community in there now. People who are just exchanging ideas and asking questions and stuff. So that's a nice way for you to get started. Call sign. Right, here we go. SIP, work, pension, land, property, bonds. Even there must have been a precursor to that. I don't know. Let's have a look. Okay, so that one, Lamu, is going back to your ETF question. So if you're buying a bond, that's very different to a SIP, and it's very different to a workplace pension, land, property, and stuff like that. I don't know whether I'm getting that wrong. Just let me know. Kumar, to my understanding, total ISA allocation is £20,000, including cash plus stocks and shares. Yep. Apart from this, would you invest 4K in LISA? Am I right? Okay, I don't really understand the question, but let me just think. This is what I think I got from this. So your total ISA allowance is £20,000. That is inclusive of your £4,000 lifetime ISA. So if you use 4,000 or spend, if you contribute £4,000 into your lifetime ISA, that gives you £16,000 that you can either put into a stocks and shares ISA, a cash ISA, or an innovative finance ISA. So your LISA allowance is inclusive within the £20,000 allowance, effectively, if that makes any sense. So you can't have £20,000 then put £4,000 into a lifetime ISA. No, your £4,000 LISA allowance is included in that £20,000. Should you invest in a lifetime ISA? Well, that really depends what you're using it for. I've done a video on lifetime ISAs before, so it might be worthwhile referring back to that. But essentially, a lifetime ISA is for, number one, if you're looking to get on the property ladder, purchasing your first home, or if you want to invest for retirement. Those are the two reasons why you would use a lifetime ISA. You do get 25% bonus from the government. So for £4,000 going in every single tax year, you get £1,000. But in the case that you're purchasing a house, you do not get the money unless you are literally purchasing a house, and you do not get it if you try to withdraw the money before the retirement terms and conditions on the lifetime ISA when you open it. So not a straightforward answer, but you need to know which one applies to you in terms of why you would use a lifetime ISA. Is there any reason why your question would not appear? Christy, I don't know. I have no idea, mate. Most people are still able to post questions in here, so I don't know if it's something on your side or not. If you're following me on Instagram, drop me the message on DM, and maybe I can get to it that way. Okay, so Costadin, talking about pensions, what are good ways to trace old pensions from employers who worked years ago and temporary contracts and move the money? Right, okay, I'm going to post a link in here for you, Costadin. PensionBee are really, really good. They have a really, really simple service for you to use. All they need is the name of the employer, when you actually worked there for, and they will go off and do all the work for you. And if there are pensions that they found that they can then move, they will then contact you and say, we found this pension, that pension, this pension, and they will move it for you. I've used them before myself. Very, very easy to use. And yeah, you just fill in the form once and they do that work for you. So I'll try and find that link in a moment. Actually, if you go onto my Instagram, there's a link in my bio in the link tree that says consolidate past pensions. I'll try and find the link before the end of this and pop that in here for you to use. Let's have a look. George, what amount can your mum gift me in order to buy property in Liverpool? We currently live in affordable accommodation. In order to keep where we are, now I would need to buy in my name, tax exemptions. Okay, so if someone's gifting you money to buy a property, there isn't really a limit that for them to gift you. They can gift you whatever you want. So if your deposit is 20% and you need 20 grand for a £100,000 flat, she can give you the full 20,000. I think from a mortgage point of view, they're going to want to see source of funds. So obviously, the money has to be coming from a legitimate source. They want proof of that. So they want to see the transactions through the bank as well. And that's really to do with anti-money laundering. So that's a given. In terms of tax implications, the main thing your mum really needs to be concerned about is, what happens if So there could potentially be a tax implication if she gifts you the money and she dies within 7 years, because there will be a tax bill to pay on that gift, potentially. So that's a consideration for you right there. But what are the main other things that you need to be concerned about? If it's a gift for property, that's the main thing, really, to be honest. But she does need to account and actually note that she's gifted you that money, because the 7-year clock will start the minute she gifts you that cash. So for inheritance tax purposes, she needs to definitely document it. How to live spaced decisions. I love the tattooed chef. I need to have a look at that. I'm going to write that down in a moment. Let me know if you can see this. We can see that comment, Christy, but can't see your question. Terabyte. There we go. When you open a trade in 212 ISA stocks and shares, do you still get interest for using it, or is it just the 20,000 interest-free benefits? Okay, let me just get that. I'm trying to understand that question. Do you still get interest for using it, or do you just get the 20? Right. So let's differentiate between interest and investment returns. Interest is what you would get if you put money into just like a normal account and it was paying you an interest rate of, say, 1%. In a normal account that is outside of an investment, that is interest. Now, if you're looking at investment returns, if you're looking at a trading ISA, stocks and shares, so a trading 212 stocks and shares ISA, that you will be investing into and buying companies. So if you invest £20,000 on trading 212 into an ISA, in a stocks and shares ISA with them, then if your £20,000 goes to £5,000, it is completely tax-free. The £20,000 plus the £5,000 gain, because the stock has gone up in value, is completely tax-free. I don't know whether that answers the question, but essentially, and it might be worthwhile watching some of the ISA videos that I've done here, you can pay in £20,000 into an ISA every single year. Stocks and shares, cash ISA, lifetime ISA, innovative ISA. You can pay £20,000 in. Anything that you get over and above 20,000, be that by investment returns or account interest, is completely tax-free. That is the deal with an ISA. There are no other benefits, really. That is the deal with the ISA. There are no other quirks or mysterious features that come into play. Those are the main things. But there are a couple of videos on ISAs. Definitely go and watch those. Okay, so Lamu, create a pie chart in Trading 212 for ETFs and allocate maybe 10 shares into the pie. Then they will play with the percentage. Yeah, I think that's a response to a question maybe. Food dweller. If you invest £19,000 in an ISA in the first year, we've already answered that. I said interest instead of tax. So, mate, I don't get what your question is here, man. So let me just get this again. So if you pay £19,000 in 1 year and you put £18,000 in the second year, you've got £37,000. So if you've got interest on the account, because the interest is paying you money, it's all going to be tax-free. So yeah, there is no tax on it. So I don't know whether I've captured that correctly or whether we're getting lost in translation there. Anything that you put into an ISA, £20,000 allowance every single tax year, that is the contribution limit. Anything that you get over and above that is completely tax-free. That is the whole point of investing into an ISA, that whatever you get over and above the amount that you contribute, it's completely tax-free. That is the main benefit of an ISA. Is it true only 4% of investors only beat the index fund average? Depends where you get that average from. It depends how it's been looked at. There are different studies that will extrapolate different things. So it's hard to know without understanding exactly what they were looking at in the first place. 4% investors only beat the index average. It depends. Well, it depends. It depends what they're looking at when they're saying only 4%. Because if you look at the markets historically, and index funds are great because, you can get good diversification. You can access them at very, very low rates. If it's returning, 10, 12%. If you're talking about active management or stock pickers, that's a completely different question. But it depends on what they looked at when they said only 4%. Leo, do you think NSNI premium bonds are good investments? I currently have 100,000 of premium bonds. They are a good place. They're a safe haven right now, mate. Whether you're getting the best return on the 100K that you have in there is a question. Could it be better invested in the stock market? Possibly, maybe, but it really depends on what your goals are and what your priorities are. For some people, they would rather have money in NSI premium bonds because it's a nice place for them, for the money to be. It's tax free and it's a safe haven. If you're not the kind of person that wants to experience or put up with the volatility of the stock market, then that could be the best place for you. If you're looking for a little bit more bang for your cash, then you may be looking at potentially saying, you know what, I'm going to take 20 grand of that 100K and put it into the stock market. It really is down to personal preference, mate. Right, okay, where are we? Let me just see how many questions we got down here. Right, so Mark, hi. What are your thoughts, market correction in the next couple of quarters? If one was of the view a correction was on the cards, any ideas, best hedging strategy? It's hard, mate, because look, if you go into it with the view that the markets are going to crash, then what you should typically do, what would typically happen when you're investing is you would have a look at, you know, how you then allocate the money into maybe portfolios or into ETFs to give you a counterbalance or a counterweight into certain things. And it also depends on what you think is going to crash. Are you thinking certain sectors are going to crash or a certain market is going to crash? What exactly are we thinking of here? Because there are different ways that you can hedge it. So if you thought, for example, that the UK market was going to crash, then because of Brexit, for example, we've not spoken about Brexit for a very, very long time, that you may just then assume, actually, you know what, I'm going to put more money into the US stock, into the US market or to the European market. So there are different ways you can hedge your strategy there. It really depends on what you think might happen going forward. But with all this kind of stuff, it can keep you up at night. So again, it comes back to why you invest in the first place. Do you have a long-term strategy for this? If the markets are going to crash in Q1, Q3, or even Q4 next year, nobody knows. But if it does, if you're in the investing game for, you know, a 10-year timeline, then it's a blip. It doesn't matter. It's just a period of time when the market falls. It's inconsequential to the bigger picture. So there are lots of things that you can consider in terms of the risk element when it comes to investing. But really, if you look at the returns on, you know, long-term investment funds, even with all the volatility and all the crashes and all those kind of things, they've still done extremely well. So it's hard sometimes because it's very, very easy to overthink it, but it really does depend what you think is going to happen. And because there is no crystal ball, there is no way of really knowing. So how do you prepare accordingly? It's very, very hard to do. Very, very hard to do. That's why these investment houses have like rooms and rooms of research analysts and people looking at this kind of stuff, looking at particular markets, the equity market, the bond market, the property market, specifically looking at what might happen, where to put money to hedge their bets. As a retail investor, it's very, very hard to do. Call sign. Okay. Have a look at the discount course. Yeah. So, okay. So just for you, call sign, the discount ends tonight, literally, because I did it for the weekend. I put it up on Friday. It's going to end literally tonight at midnight. So if you want to get there, there is a link. I think there's a link on the, there's a link on the videos. There's a link on my bio on Instagram as well. So go and check those out. But yeah, it will end tonight. So just bear that in mind. Where are we? We're almost at the end of these, guys. Let's just have a look at these. Okay, George. I'm holding off from investing my first 4K into my LISA until I know if we will go ahead with buying or not. Yeah, I mean, it could be a good move for you, mate. I mean, when you say, yeah, I mean, I think this is a question of, I think you had before, it tells you your mum gifting you money and stuff like that. Yeah, I mean, look, prudent move. You need to understand what you're actually doing first and foremost, because like I said, if you do put money into the lifetime ISA, you don't get the boost from the government if you're not going to be using it for house purchase. But then again, you have nothing to lose if you do put it in there. But yeah. Mark, are you aware of any UK funds that have an SPAC exposure? Not off the top of my head, mate. I'd have to have a look for that. Not off the top of my head. George, thanks, Pete. Along the lines of what I thought, Love the channel. Thank you, mate. Dr. Strange. Interest is not allowed in my religion. What investing strategies do you recommend? So there are some investments that will. So I think maybe if you're from Islam, there are some Islam-friendly investment strategies. I haven't actually done a video on them just yet. I might actually do a video on them. There's a number of them that you can use. I don't know if you're following me on Instagram, but if you are, DM me there and I can send you a couple of links. Huro, let's have a look. Hi, Pete. Thank you for your great work. Can I invest in an ISA in 2 platforms under 20K? So example, 14K in Vanguard, 6K in Trading 212 same year. No. Well, let's put it this way. Because you're speaking Vanguard and Trading 212, what you're looking at there is a stocks and shares ISA, which means you can't, because you can only have one of each ISA every single year. So you can't have a Vanguard one and you can't have a Trading 212 one. So no, you can't. So the idea will be for you to pick the one that you would rather use, really, to be honest, and stick with that one if you can. But yeah, you're only allowed one of the 4 kinds of ISAs each tax year. You can't have 2 of the same. The HMRC does not like that. Limo, right, let's have a look. I've just jumped there. 1 second, let me just find it. Where are we? Oh, here we go. Is it true that people that opted out of SERPs in the 80s and 90s may be entitled to contributions into their pensions in the next few years? There's a big dispute over that. I've not kept up with it. I think that is true. Because there's a whole generation of people that are going to be disadvantaged because of that. And yeah, I mean, the whole pensions thing at the moment is a little bit of a mess. I think it's true, but I can't say that I've actually paid a lot of attention to what's gone on with the old SERPs at this point in time, mainly because it's not really affected me. And really, most of the clients that I was working with, whilst they did have SERPs, they had quite a bit of a large personal pensions as well, sat behind them. But I can definitely look into that. But I know it is a bit of an issue right now. Pedro, how you doing, Pedro? Mama Furfur, great chat, Pete. Thank you, Jen. I really do appreciate it. Dr. Strange, are Bollinger Bands a good indicator of stock price? Bollinger Bands. Look, Bollinger Bands you can actually use. I mean, but there's a number of things that you can use when you start analyzing stock prices and stuff like that. So you can use it certainly as a barometer of one of the things that you can actually use. But, if you're analyzing, stock price, there's a lot more that goes into it than just, using one thing. But you can land on one if you wanted to. Depends on how confident you are in that. Excellent question. Where was this? Where are we? When it comes to investing, has your sector focus shifted in the last months due to the pandemic and its effect on the market? I don't invest specifically in any sector. Like I said, most of the time when I invest in funds. So all of that research is done on my behalf. I don't have necessarily the temperament to be sat there and looking at the tech sector specifically and picking out stocks that I want to invest in for those particular companies. I don't do it for any serious amounts of money. So I typically will invest in index funds. I've got an LNG fund right now, which has done really, really well. And all that work is basically done. So those guys are the professionals. They've got floors and floors of research analysts. They build the portfolio. I match my risk profile to the fund and I go and put my money in that. And they basically run it. I don't pay attention to sectors specifically and build my own portfolios with any of my significant amount of money at all. I just don't do that. I don't have the temperament. I don't have the time of day to actually do that either. There's so much good stuff going on that I'd rather just leave it to the professionals. I've been in the industry for quite some time now, so I have maybe a little bit of a different view of the investment industry than most people do. I do trust a lot of them because I know how they work, and I've got relationships with people who work in those businesses, so I know that they have dedicated people looking at dedicated things, and I know that they can be very, very thorough. That isn't to say that they're absolutely perfect, because they're not. They do have their shortcomings, but I do trust that the process that they go through isn't something that I would be able to go through as a retail investor, certainly given the access that they have with some of these companies that they're buying and the research and the access that they have to the options that as a retail investor will be impossible to come by. So I don't invest any large proportion of my money on trading 212 or Hargreaves Lansdown. A lot of it goes into index funds because they are easy, cheap, and they give me diversification, and they give me the ability not to have to worry about specific sectors going pop. Although I do take an interest in tech because of Tesla and so on and so forth, and Amazon and what's going on right now. But it's not something that I heavily invest in because I do believe in diversification. Like Food Dweller, if you live outside the US and you invest in US stocks, do you have to pay tax on your capital gains in US, or you pay tax where you reside only if you have to pay tax in both US where you reside? It all depends on where you're from, mate. So if you are investing in US stocks, the first thing you're going to get is dividends withholding tax. That's one of the taxes you're going to get. So if you buy into a company that has dividend payments, the American government is going to tax you. And there is a tax treaty between the UK and the US in terms of reporting. So a lot of the times, if you're using Trading 212, for example, you need to keep note of everything that you buy and sell for a profit, everything. And then when you're doing your returns, you really ideally should be looking at an accountant, because that right there is a tax question. If you're investing via funds, some of this stuff is taken care of within the funds. If you're doing it yourself, that's a consideration that you need to be mindful of. So if you are investing, then you really need to be looking at, right, making note of everything you buy and sell, what profit you sell it at. Make sure that you know what your tax allowances are. And again, that's actually covered in the course. But you will also need to make sure that you're doing your self-assessment. And I would definitely recommend working with an accountant just to make sure you don't miss anything at all. But again, if you only invest in small amounts of money, it may not be an issue. But one of the things that you are going to get is, if you do have capital gains, because you are in the US, if you are UK resident, your tax is due to the UK government, not the American government, but they do tax you on dividends. Let's have a look. Where are we? How much money can you realistically make from Vanguard over a period of 10 to 15 years? Mate, depends on what you're investing in. It's very, very hard to say you're going to make 50% in 10 to 15 years. Completely, it's hard to say. No, I don't know what's going to happen in the future. That's a crystal ball question. The best thing you could do is, again, when you're looking at doing your research for these, if they give you some kind of indication of what the fund is aimed or targeted to do, you can then use that as an extrapolation. But there are no guarantees when it comes to investing. Markets will go up, markets will go down. We don't know what's going to happen in the future. So there is no way of saying realistically you're going to be able to get this. Depending on your risk profile, you could say, if you're a cautious investor, it may be realistic to expect 2 or 3%, but it depends on what's going on at the time. For example, COVID right now, right? What are you going to get right now with COVID? If you look at it from January to November this year, what is a realistic return? Nobody knows because of the circumstances. Nobody really knows what the impact of this is going to be through 21 and 22. Nobody really knows. How long is it going to take for government to recover? So it's really, really hard to say what's a realistic return on investment is going to be. Yes, we are speculating. Yes, we are investing because we hope that sectors will recover, that share prices will recover to where they were prior to COVID. But how long it's going to take, how quickly it's going to take, we have no idea. So it's very, very hard to say that realistically you should be able to get this. We don't know. Martin Cole. Okay, hi brother. Did you find out any more about cash effects? Thanks. Yes, cash effects. All right. Okay. So I mentioned this last time on the live that we were here. I'm contemplating doing another video, but I'm a little bit hesitant because there is so much negativity when it comes to that business. And I've reached out to a number of the people who have been so vehemently defensive of what they do, although there is just no foundation at all to really quantify and validate what they're doing. I've invited people on. They don't want to come on. They don't want to have a conversation. They won't do it. So I'm thinking of making a third one, which is basically more of my concerns around anti-money laundering, the fact that you're putting money into them using Bitcoin and it's not traceable. They don't ask you for ID. They don't do anything. So for me, that you can't verify that they're trading. The 1% that they're giving you on a weekly basis, if they do that every single week, that will put them in the top 1% of traders on the planet. Extremely hard to quantify. So I might do another one, Martin. I'm just a little bit reticent because I don't want the negativity on my channel, but yeah, it's an interesting one. Which of your ISAs is best to pick? Which of the ISAs is best to pick? It completely depends. You need to come to that determination yourself. Are you investing? If you want to invest, then the stocks and shares ISA. If you don't want to invest, then the cash ISA. If you are looking to purchase your first home or you're looking to invest for retirement, then a lifetime ISA. If you want maybe a little bit of stocks and shares and you want to help out burgeoning businesses, then an innovative finance ISA. It really depends on what your circumstances are and what your goals are. I talk a lot about goals on this channel. Why are you investing? Why do you want to invest in an ISA? What is the actual goal? So ISA, tax-free, tick. But why are you investing? Are you investing for 10 years, for 15 years? If that is the case, then you need to get returns. So the stocks and shares ISA may be a good starting point for you. But again, you need to bear in mind, do you have an emergency fund? Do you have good control over the money that you have coming in, going out of your account on a monthly basis? So it really depends on what your circumstances are. If you're looking at buying your first house, then you should definitely go with a lifetime ISA because that would make sense. But if not, then those other questions will be very, very pertinent. Terabyte, does it? Thank you. Okay. Enjoyed the channel. Appreciate that. That was more of a conversation. Sambo, hi Pete. I'm currently investing in Wealthify stocks and shares ISA. Will it be wiser to move something more cheaper to Vanguard? I am new to investing, started just 2 months back. If you go to Vanguard, you will need to make your own selection yourself. So you need to make sure that you understand what you're moving from and what you're moving to. That's the important thing. Now, if you are new to this, and if you go to Vanguard and you go and pick out a fund, and you don't know what that piece of paper says, you don't understand any of the language on it, then stay where you are. You really have to understand what you're moving to from where you are right now. The great thing with people like Wealthify is they've already built the portfolio for you. Yes, you're paying a little bit more money for it, but they've done all that research work, which you would have to do if you move to Vanguard. So it may be something that will be worthwhile you doing and looking at, but you have to kind of understand what you're going to move to with Vanguard and how it's going to save you money. If you're the kind of person that doesn't want to sit there and read like key investors information documents and fact sheets and all that kind of stuff, then maybe not. But if you are, then by all means, definitely go and have a look at it and do a comparison, performance, cost, all that kind of stuff, what it's invested, where it's invested, how it's invested, all that becomes important. It's not just about cost. So please bear that in mind. Senna, if I reach £85,000 FCA insured limit in a Vanguard ISA, can I open a Trading 212 ISA the following year so that my money stays insured? Yes. Okay, so right. So what I'm guessing you're saying here is, in a Vanguard ISA, you've got £85,000. Yes, you can. So you can open the following tax year, you can put another £20,000 into a Trading 212 ISA. A lot of people do this. They spread it across providers just to make sure that they do have their protection and they keep that intact. One thing that might be worthwhile, what you are looking at, and I don't know any off the top of my head that provide this, but if you are going to be shopping around, one thing that is really important to look for in some of the language when you're reading about the Financial Services Compensation Scheme is whether they use the phrase no upper limit. Because if they use the phrase no upper limit, it essentially means that regardless of how much you have in there, you will get protection at the level where you're at. So for example, if you had £200,000 with them, they will give you protection up to 200,000. There aren't that many providers that do it, but some do. But you can, if you wanted to, open a Trading 212 account, accumulate £85,000 with them, then go on to Hargreaves Lansdown, accumulate £85,000 with them, so on and so forth, just to get your limit protected with each of them. That's fine. Jeffries, hi Pete, great channel. Looking to use my lifetime ISA to get a mortgage in roughly 5 years and then keep it for a type of pension later in life. Would you suggest a stocks and shares ISA or a cash lifetime ISA? Okay. Good question. Really going to depend on your risk appetite, really, to be honest. I mean, look, I always say this about the lifetime ISA. You're going to get the money from the government anyway, which is 25%. And that in itself is a really good return. I understand the notion that people also want to invest. But at a 5-year timeline, you would need to be very, very careful about taking lots and lots of risk, because if the markets were to tank 4.5 years in and you needed your money out in six months' time and the markets hadn't recovered, is it really worthwhile jeopardizing the house purchase because you took too much risk to start off with? So if you are going to go with a stocks and shares ISA, the risk element is really, really important. So cautious funds, balanced funds might be more suited to you, but it will be entirely dependent on what your appetite towards this is. How does it sit with you? How does it sit with you with the possibility that, oh, you know what? You might need it out in 6 months and the markets dive. I had that happen to a mate this year. COVID, he was buying a house down in Kent. And James, I've mentioned this a couple of times on the lives. He literally had his deposit money sat in an investment. And literally March happened. The market started to crash. He had to pull his money out and he lost about 5 grand. Luckily, he had money set aside elsewhere that he could call upon. But he was like, I lost 5 grand from his house deposit. His missus wanted to kill him, apparently. But you need to think about it in that way. So I can't say go with a cash ISA or go with a stocks and shares ISA, because that will be giving you advice. But those are some key considerations. The risk element is really important. There's a question here. Limo again. Let's have a look. I created and paid into an Aegon ISA, £50 this month, while already paying into a trading 212 ISA. Have I screwed up? Yeah, so you're not allowed to have more than one of the same kind of ISA in any one tax year. So if you paid into an Aegon ISA, is it a cash ISA or a stocks and shares ISA with Aegon? I'm guessing it's going to be a stocks and shares ISA. So if that is true and you've got a trading 212 ISA, you're not allowed to do that. You've got 2. So yeah, potentially you're going to be in breach of the contribution rules. George, what's your thoughts on Moneybox? Moneybox are great. I used to use them maybe 2-3 years ago. Really, really good on the roundups. Really, really good on some of the stuff they launched around pensions as well. Very, very good. I almost got involved with their crowdfunding and put some money in, but they had some very, very... See, this is the thing with crowdfunding. This is something that I think is really important. So I almost did a video on it, but they closed down the crowdfunding before I got round to actually shooting the video. If you're going to be investing in a crowdfunding company or company that is crowdfunding, you have to read the investment prospectus. You have to read the investment prospectus. The reason why I didn't put money into Moneybox via their crowdfunding was there was a stipulation in the prospectus that said you cannot withdraw your investments. If I was going to put 5 grand in there, I could not get my 5 grand back unless they floated or sold the business. And even then, they had to float or sell the business at a certain amount in order for me to qualify to get my money back. A lot of people would have invested in that company and not read that fine print. So you have to read the investment prospectus. It also meant that once I put the £5,000 in, I just couldn't be like, I want my money back in 2 years' time. It was literally on IPO or on sale. And if they didn't IPO or sell at a certain amount, my money was lost. So really, really important. Great company, great service, but on the crowdfunding side, people need to know that. And I don't know whether if anyone here did invest in them. If you did you read the investment prospectus? I'd be interested to know. So no, great channel, Pete. Thanks for you. So informative. Thank you very much. Nathan, just purchased your beginner's course. Looking forward to learning the basics. Thanks, Nathan. Listen, it's about 94 minutes roughly. It will get you through all the stuff that you need. If you have any questions off the back of that, then ping me a message on IG. We can have a conversation on any finer points. But there are tests, there are assessments in there that you can take, so it helps you consolidate your knowledge. But it will give you a really good understanding of all of the basics, some of the real important stuff that people don't talk about, like investor psychology. Like, how should you think about, how do you manage the loss aversion? Because we all feel this. Stocks are going down. You're like, oh my God, I want to get out. How do you manage that? It talks through all of that stuff. So if you have any questions, Nathan, give me a shout. Bitcoin, I do hold a little bit of Bitcoin, but I'm not a Bitcoin expert, so I can't really speak on it with any kind of authority, if I'm completely honest. Great advice, Pete. Thanks a lot, bro. Thank you very much. Stuart, Pete, do you think blockchain is going to change the way the world operates, financially speaking? Keep up the good work. Yes, I do. I think that, was it last week or so, the Americans are setting in. The American regulator is now stepping in to regulate Bitcoin and cryptocurrencies. That goes against the whole point of cryptocurrencies specifically. They produced a paper, I think about a week and a half ago, to talk about what they were looking to implement. I know why they're doing it. I understand why they're doing it. I just think it goes against the whole point of Bitcoin and the blockchain. The blockchain as it is, as a piece of technology, that is something that is definitely worthwhile investing in. I mean, you talk about crypto and the investment houses being slow to invest in that sector. It's because they are more looking at how they invest in the blockchain itself. And they don't quite know how to do it yet. I think it's short-sighted to a certain extent, but the blockchain is what makes this all happy. So they feel as though that is the asset to invest in rather than the coins, Bitcoin, Ethereum, all that kind of stuff that come off the back of it. But blockchain is going to be a game changer. I think the evidence is already there. It depends on whether the financial system actually wakes up, embraces it, or whether they try to fight it or try to alienate it. I think they've tried to do that for years, but who knows, But yeah, blockchain is great. I think we're pretty much at the end of it. Where can you find the course you were talking about? So Jeffrey, if you go onto any of the videos here, or if you go onto my Instagram, there is, actually, let me just see if I can find the link. I'll see if I can find the link here quickly. I need to post 2 links, actually. I need to post the pension transfer link, and I'll post that link as well. Actually, you know what? I'm just going to post my website link for it, actually, because that will just be easier. Then I'll find the pension link shortly. Bear me 1 second, guys, while I just do this very quickly. We want that one. Okay, so we want this page. All right, so Jeffrey, this is the link to the investment course here. There we go. Hope you can see that. And then I need to find the other one for the pension transfer, the pension tracing service as well. So I'm just going to grab that for people to be able to use also. But I do appreciate you guys being here and actually spending time with me. It's just gone past 11 o'clock, and I know that many people will be looking at their clocks at the moment, looking at work in the morning. And I think we still have about 50 odd people on this call. So I really do appreciate you spending the time here with me and answering and asking questions, I should say. This is the... Is that the link? No, it's not the link. I need to find it. Bear me 1 second, guys. I'll try and find it on here. But yeah, I do appreciate it. Let me just see if there's any other questions on here that we need to answer. Yeah, let's do it. I mean, look, the US government are going to fight this as much as they possibly can. Because, look, I understand what crypto is, but I can also see where they're coming from a regulatory point of view. A currency that is not centralized means that it can't be tracked. You can't use, economic levers like, inflation and all this kind of stuff and monetary policy to influence it. So it's one of those things that, I can see it. But at the end of the day, Bitcoin was designed for this. The blockchain was designed for this. You can't continue to fight this all the time. Bitcoin has got a track record now. So they either have to embrace it. The banks are trying to come up with their own currencies, their own cryptocurrencies. Who knows what's going to happen. Jeffrey, one last thing was I'm looking at investing ASAP and have a bit, not a lot, of spare cash to do it. My wife and others are a bit skeptical, saying it's risky, etc. What would you say to reassure them? Okay, look, so this is the most important thing. If you're going to invest right now, it's really, really, really important to first and foremost try and get an understanding of how things work. Now, through history, wealthy people have been investing in the markets for decades and decades and decades. Wealthy people are plowing money in and have been plowing money into the market since March. since the markets crashed in March, wealthy people have been throwing money in. We don't get any financial education around how this stuff works, which is why we feel as though it's gambling, because we always hear it's going to go up, it's going to go down. It is going to go up and it is going to go down. That's just the fact of the matter. So first and foremost, get a little bit of an understanding and education about how things work. There's lots of videos on my channel that will help you do that. Second thing, if you are going to invest, just don't go gun-ho, all in one go. And what I mean by that is just don't go and take stupid, ridiculous risks. Start with something really like easy. Cautious fund, put some money in, put it into an ISA, it's completely tax-free, and then just start to monitor it and just start to have a look at it, and then just literally just gain some confidence from there. You cannot negate the fact that it is going to go up and go down, and it will pretty much do that every single day. But ultimately, you need to have a goal. What are you investing for? So between you and your wife, try and have a conversation around, look, why is investing one of the things that you're thinking about? How is that going to assist you in achieving your goals in the future? What are your joint goals? How does investing play a role in that? And then from that point onwards, you can then start to say, okay, well, if we agree that this is going to be acceptable, what if we take the least amount of risk to start off with, see how it goes for 6 months, and then review where we are, and then possibly have a look at whether we do something else and move up the risk scale a little bit more. The worst thing you could do is go into something really adventurous that will be very, very volatile, up one day, down the other. Your wife looks at it and goes, she wants to kill you because she told you it was too risky. So please start with something really, really light, cautious, low risk first and foremost. Sit down with your wife as well and really kind of have a conversation around, look, why is investing one of the things that you want to be involved in? You know, it's really, really important. Try and get an understanding of how things work. Typically speaking, it's all about risk management. That's going to be the most important thing for you. So how can you invest knowing that you've got some exposure to some companies in equities, but also have a counterbalance in things like bonds? And funny enough, that's the kind of stuff that I talk about in the course as well, because it's all about how do you build a portfolio? How is a portfolio constructed to limit your risk and to measure your risk? So you can use things like bonds to give you a bit of security, because with a bond, you know exactly what's going to come out at the back end of it. So you don't need to take as much risk on the equity side because you've got a counterbalance in there. So it's really about understanding what the basics are, Jeffrey. If you have any questions past this, mate, find me on Instagram and stuff, and let's have a chat on there. But I hope that kind of answers the question to start off with. But definitely have a question with your life. The reason for investing, you're saying retirement 30 years plus down the line. With early 20s and also a bit of passive income wouldn't go amiss. Hey, mate, listen, if you're in your early 20s, find me on Instagram, book a free session with me. If you and your wife can jump on, mate, I'll just run you guys through things like a simple compound interest calculator, for example, because, you know, your goals are really, really important here. So you're saying 30 years plus in retirement. I'll be really interested to see and have a conversation with the both of you around, well, what do you envisage retirement being? Because it's okay to invest for 30 years, but what do you want in 30 years? Where do you see yourself? Mortgage free, I would imagine, right? Kids growing up, I would imagine, right? But where are you? Are you on a beach somewhere in the Caribbean? Where are you? What do you want to do? Because whatever it is that you want to do, there will be a monetary value to that. The question will be, if you invest now, every single month for 30 years, is the potential money that you could get if we assumed a certain investment return over that period of time worthwhile the steps that you take now to get there? A lot of this isn't about the money. Actually, it's about what it means for you in 30 years' time. I always say this, and I believe this a lot, because when I was working in Canary Wharf, it's something that my manager at the time did with me, and it worked a treat with me. You can say that you're going to do something all day long. If you don't have an intrinsic reason to do it, you're never going to do it. At least you might start, but you'll never stay the course. So it's really, really important. And I would love to know what your intrinsic drivers are for 30 years. You may not have thought about it so far at this point in time, but it's important to know, and it's important to kind of understand. And I'd love to take you guys on a journey of what that might actually look like for you, so that your wife actually feels a little bit more comfortable about investing, and she'll be able to see how investing can get you guys to that idea of what you want in 30 years time. So find me on IG and just I'll send you a link to book a free consultation with me. But yeah, we can get into that. But I think you have to start early, mate. And the fact that you're thinking about it now, you're onto a winner. And it's all about how you invest as well. So 30 years plus is all about how you invest. So we want to make sure that you're doing and investing in the right place as well. Cool. Food Dweller. Is it allowed to have a Vanguard ISA of £20,000 in 1 year and trading 212 ISA or 20,000? Yes, it is, because your allowance is £20,000 per tax year. So as long as you do it within the tax year, you're completely fine. Watch the ISA videos that I've done. It explains that very, very clearly. You cannot if you have this tax year £20,000, you can go and open another ISA with anybody else the following tax year. You don't have to keep the existing one that you have. So, and you can do that every single year. You could open a new ISA with a new provider every single year if you wanted to. Some people do that, some people don't. Some people just say, like, you know what, I like doing this and this is what works for me. They keep one, right? I know plenty of people who have done that. But you can have one ISA with Vanguard this year, and then April next year go and open one with Trading 212. Not a problem at all. All right, I'm glad I stayed awake. I've learned a lot tonight. Keep up the good work, Jeffrey. Yeah, brilliant. Thank you. I'll message you on IG. Mate, appreciate you guys. It is now 11:15. We spent a lot of time on here. Thank you so much for dialing into this and paying attention. Until next time, the next one is going to be, I'm going to be in Dubai over Christmas, so there might be a little bit of a pause in the lives whilst we're out there over the Christmas period. And I'm sure people want to spend time with family as well. So the next one of these will be on the 12th of December. And after that, we're probably going to speak, I would imagine, in the new year, because after the 12th is the 26th and no one's going to be available. So the 12th will be the next one, and the one after that will probably be the 9th of January, which will be 2021. But guys, thank you so much for dialing in. Take care and catch you soon.